So let's say that I buy this and this is a unit of artificial intelligence. So let's say I buy one share in one of the big AI companies right now. Because investors are so excited about AI, they value this at $100. This unit that I have here, they say it's worth $100. So my net worth is now $100. I go to the bank because I have this net worth, this paper worth $100. And I ask the bank for a 50% loan on this thing that I own. They give me $50. Now I have $50. And then something happens in the economy, which means that the investors who have invested in this, and investors generally, now need money to pay off their other debts that they have. So this could be a war, it could be some kind of event that takes place. And suddenly everybody rushes to sell their assets like this one. And so when I go to sell this, the price of it has now plummeted to say maybe $25, but I took a loan at the bank for $50. So I owe the bank $50. But now this thing that I have that was worth $100 a couple of months ago is now worth $25, and I'm $25 in the hole. So I have to quickly sell. And then with everybody selling, all the price of assets drops, people stop spending money at the restaurants, like you say, there's less money around, and then the bubble has burst and we're in this sort of declining.
You got it.
Okay, good. All right, fine.
And it happens because it must happen. I mean, meaning in these tremendous changes, there's very little that's known. So anybody who's in the business of making AI can't be precise. They don't know exactly how much money is going to come in, right? So there's either one of two things. You either don't invest enough and then the competition runs away, or you invest a huge amount and you can't be precise, okay? And so when that dynamic happens, it's a problem. So yes, you said it very well. So I'm going to repeat one other thing to emphasize. What's quite common now is you can issue stock for, let's say you raise $50 million. And you value the company at $1 billion. Mm-hmm. Only $50 million was actually spent on that company. But now if you raise that, you're a billionaire. Mm-hmm. Okay? Because the accounting value of that, what do you own? You own stock that is valued at $1 billion. Nobody paid $1 billion or whatever it is, right? And now you own that stock. But that stock you can't spend because you can't spend wealth. Mm-hmm. In order to spend it, you have to sell some of that stock to get money.